Thanks, PT. With me now is Yilan Shou, China Managing Director and Senior Vice President at Ruderfin, Tim Schlick, Head of Planning at DDB Greater China, and Jonathan Xiaozhe, Interbrands Executive Strategy Director for Asia Pacific. Tim, local companies are still learning how to become national brands. Are they ready to go overseas? And if so, how are they getting ready?
It's an answer you probably hate, but it depends. Some Chinese companies have been making fantastic progress if you take a look at Li-Ning or Haier or Air China. But it depends highly on first the category they're in. So are they fighting an uphill battle because of the category they are in? Or, and secondly, how long have they been doing that? And some companies have done pretty good so far, but I see a couple of years going back down.
Right. And Jonathan, which brands do you think, other than Li-Ning, have the best bet and the best chance to go overseas?
Well, I think we should be careful not to introduce our own biases into the question. I think the truth is there are many Chinese brands who are already very successful overseas. They're just not the sexiest brands in the world. They're B2B brands, right? So companies like Huawei, or companies like Sany, which is the Caterpillar of China, Mindray, which is sort of medical devices. I mean, very phenomenally successful overseas, driving more than 50% of the revenues now. So I think that there are already lots of companies. I think if you want to look at more sort of consumer brands, I think the brands that you're going to probably see go overseas in the future most successfully are automotive brands, because they'll be able to change the value equation in the dynamics, and similar to the way electronics companies from Japan or Korea did it many years ago. They were able to bring in products at a lower price, but of good enough quality, and they were sufficiently different in price that consumers can say, well, wait a minute, I'll take a chance. I'll have a closer look at this.
But looking at, the global sort of financial crisis still, and the effects right now affecting everyone from Europe to the US as well, do you think that there's any sort of backlash against, especially auto is a very sensitive industry, of course. Is it different, or do you think it's similar to what happened to the Japanese and the Korean brands previously?
Yeah, I think the issue for automotive brands is a quality issue. People, do I want to drive my kids around in a car, in a Chinese car? I think that's going to be, certainly a challenge. I think you also have to look at categories where China already gets some credit. So, for example, I think the world recognizes that China has some special knowledge of herbal remedies and sort of traditional Chinese medicines, and so you could see cosmetics brands or sort of shampoo brands going overseas with that kind of herbal natural base to them, and people immediately give credits to the fact that it is Chinese brands, and it would be good for those brands to advertise that they're from China.
Yilan, Chinese enterprises are often run by ambitious people, but are they really willing to take risks and experiment with hiring foreign talent or multinational agencies?
I really think they want. They really want to do that. That's why you see a lot of international agencies are serving local clients.
But do they know how to work with them yet, or do they still treat them like local agencies?
That's actually my question. Are they ready for it? If you are asking me, are they willing to do that? Yes, they want. But are they ready for it? I don't think most of them are.
And so then how do agencies help their clients become ready?
Agency has to understand this, and agency has to take your time and to grow the client together with you. If we given some Korean companies like Samsung as an example in the past, that's a client a lot of agency hated to work with. It's just because it's so painful to work with them. But now they become a pillar client for a lot of agencies. So you have to understand how to grow together with your client, and you have to understand that takes time and patience.
And in general, is there sort of
education.
a path? Yeah.
That's an education procedure. And that's because Chinese company, the way of making decision is very different from international companies. International companies, system works. Chinese companies, people works. That's a very different mentality if you look at that. And always we say when you work with Chinese company, the most important factor is who is the decision maker.
Right, and on that note, the CEO or the chairman, the founder,
exactly.
is usually that
You
person.
have to get very close to the top management. You have to get the green light from the top management. If you have to go through the procedure, the layers of procedures, you hear different comments, different suggestions, but none can make a decision.
But how do you get through to the top? I mean, because if anywhere else, China has the most barricades leading up to that founder, to that.
There are also networking opportunities, and there are also ways for you impress them in the board member meetings and networking opportunities that you get closer to them. Actually, I think that's probably one of the reasons why golf course is so popular in China.
So can you think of any concrete examples of Chinese brands that are showing true innovation, not just relative to the market in China, but true marketing innovation?
That's a hard question. I would say there are not that many examples. I think I mentioned Jawa before, has launched some herbal-based luxury shampoos in Paris, and I think that's quite unique. Shangsha is a new luxury brand that's part of Hermes, but has really been kind of nurtured on its own, and has really got some innovative ideas about what true luxury means in a Chinese context. The problem is that most Chinese companies are coming from a low price equation, right? They're coming from a low price point of view. They haven't figured out the difference between low price and value. And there is a big difference between, right? So a brand like Toyota, it is low priced, but it's low priced plus reliability. And that's the value that the consumer gets. Dell is low price plus personalization gives you a value. Yeah, the Chinese companies haven't been able to figure out what is their plus in that equation, which would then create that kind of that direction for innovation. Where am I going to add some additional value to consumers beyond that low price that makes them want to choose me? And I think that's a big mind shift for those companies.
And picking up on that, I would think you're absolutely right. Basically, they don't do that because they didn't have to yet. Yeah. It's a massive market, and you don't really have to differentiate. You just have to have a product ready for a massive amount of people. Yes. And this is coming to an end, or at least it's slowing in the next couple of years, and then it's going to be a different story, I guess.
What you always get is those comparisons between China and Japan and Korea. The biggest difference, though, and that people never recognize this, is that the Japanese and the Korean companies had to go overseas because they were dominant. They were dominant in their local markets, right? They were 70–80%, and the government said we need to help these companies to be able to go overseas. In China, there's still huge room for growth before they need to go overseas, and if they can consolidate that share, that scale at home, and build the margins to a point where they can afford to do the brand building overseas, to create the distribution channels overseas, to have some flexibility in the way that they operate those companies, then they'll be able to better do it. Right now, it's not a fight or flight kind of a situation. There's time.
And yet, interestingly enough, Chinese brands actually that are direct competitors of some of the brands that came out of Korea and came out of Japan are fast gaining ground on them, especially domestically, obviously, but also overseas, as you mentioned some of the earlier brands that you talked about that are already established there. So it's interesting, but you take a look at a brand like Li Ning. They've got a flagship in Singapore, they have an innovation center in Portland, they have foreign designers in Beijing, they sponsor Western athletes, but still adding all of that together, as more and more sophisticated foreign brands increase their market share and pour more dollars into the Chinese market, so brands like Nike and Adidas, do brands like Li Ning really have what it takes to keep up with them as the market also becomes more sophisticated, they evolve, they expect more creative marketing tactics and things like that? Can Li Ning keep up with it on their own home turf?
Well, absolutely, they can keep up, but it's as I said, it's an uphill battle because they lack the time that, for example, Adidas had to build the brand. So Adidas has a lot of brand value that they can work with because they did that for the past 70 years, and Li Ning doesn't have the time. So they need to be quicker and faster and probably more innovative to do that. But theoretically, of course, they can. But it's a tough game.
Do you see different behavior between private enterprises and state-owned enterprises when it comes to brand building?
Private companies usually move faster and focus a lot on cost saving. To me, that's the major difference between private companies and wholly owned government companies. But in terms of the budget, or in terms of the willingness to go abroad, I think actually the wholly owned Chinese company are more willing to go abroad because I think that's also the government initiative. We want Chinese companies to go overseas.
Yeah, I think that I agree very much. I think the private companies are more aggressive. They are more innovative. They're also in different industries than the state-owned companies, right? They're not mobile phone companies or banks. I mean, those are the purview of the state-owned companies. So there's less. It's interesting. You would hope that the state-owned companies would be more innovative because they're in commoditized industries, and you need that. But the regulation that protects them also holds them back from being innovative. You know, it's difficult to offer new financial services products that are outside the boundaries of an interest rate difference. I think one of the things that the private companies get better than the state-owned companies when thinking about going overseas is they're actually less blinded by the glitz of the first world, first tier kind of European American markets, and they're more willing to say, I'm going to overseas in Sri Lanka or in West Africa or in some places where they know the consumers are already predisposed. And I think that makes a lot of sense. I think that's just good business sense, which is, do I go after 300 million middle-class consumers in Europe and in America, or do I have to go after 3 billion consumers in China, India, and Africa that are already dying to buy my products? And I think that's just makes much more business sense.
So can you think of any examples of Chinese brands that have gone overseas and perhaps failed, and that's really kind of served as a warning sign for some of these other private enterprises who, as you said, perhaps are not as tempted by the first world attraction?
Well, I think that you saw a few years ago some high-profile acquisitions like TCL buying Thomson's television business, the Lenovo acquisition, which both of those are really perceived as having been miserable failures in every sense, financially, organizationally. And I think what you saw was about when the last 5-year plan was being developed, a lot of the state-owned companies were going to the government saying, we need your help, we need your financing from the state-owned banks to go overseas. And the government said, we understand, but you need to first prove your ability to manage these acquisitions before we provide sort of the heavy-duty financing.
So that leads us to, in one word, what is the biggest obstacle that a local company faces in building a global brand? Each of you. Tim.
Time. I think building brands needs a lot of time, and the speed, you can't do that at the speed of China. You really have to take your time and consider what markets are important to you.
I would say understanding, because the culture is so different, market is so different. They need to really understand what's the difference and be prepared for it.
Yeah, Jonathan.
I would say flexibility. I mean, I agree about time and education, but I think flexibility to be able to adapt to overseas markets. And it's funny because I think Chinese companies are the best in the world at being flexible and adapting in their home market, but overseas they need to learn those skills.
Jonathan, Tim, Ilan, thanks for joining us on Thoughtful China. That wraps it up for today. Be sure to subscribe to us on Tudo and YouTube. You can also follow us on Weibo and Twitter. See you again.